This week, we have an abbreviated edition of the FarrCast for you, as Michael and I have both been on the road and Dan Mahaffey is in Japan. But we were able to schedule a quick check-in with our friend Kenny Polcari, get a comment from Matt Leffingwell on the shutdown, and Michael shares his thoughts on the economy as we move deeper into the final quarter of the year. And now here's your host, Michael Farr.
Welcome to the FarrCast. I'm Michael Farr. It is the 16th day of October, coming here into the, just past the Ides of October. That's not bad. Moving into the last couple and a half months of 2025. A month away from Thanksgiving, folks, and we're in the middle of earnings season. And guess what? Stock prices continue to move higher. So with great news last week with a peace that seems to be holding even again this week from in the Middle East and in Palestine and Israel. And we are holding our collective breaths and crossing our fingers, make sure and hope that this continues in the Middle East. We're now shifting attention to a trade war with China and whether we're going to have cooking oil or not, ladies and gentlemen. That doesn't seem to be quite as dire as some of the other things we might be missing. But these precious minerals that we are missing are a bit of an issue, particularly for battery production, lithium ion battery production, etc., electric vehicle, and so forth. So I was on CNBC yesterday, and I said I am very, very cautiously bullish because I believe the path of least resistance continues to be higher for stocks. What does it mean? It means that stuff that is expensive is continuing to get more expensive. And yet you saw the Taiwan Semiconductor overnight reported profits that were up 39%, beating estimates and hit new records on record AI chip demand. So it doesn't seem like this AI boom is peaking at all. The wave is continuing, prices are surging, and you have this battle back and forth between fear of missing out and that inner voice that says, damn, this stuff is expensive. So when it comes to a problem that's just that simple of, I want to keep making money as long as it's making money. John Ford asked me a question on the air on CNBC yesterday. He said, how do you know if it's working? How do you know if it's got a good stock? How do you really distinguish whether you're in the right place? And I said, you're always in the right place if it's going up. It's really simple. If it's going up, you're in the right place. And if it's going down, you're not. It's that simple. That's what we look for. We're very kind of Pavlovian. We're very, very simple Wall Street people. Speaking of simple Wall Street people, my friend Kenny Polcari is the chief market strategist. I couldn't resist. For Slate-Stone Wealth and the voice and face of Fox Business News, Move Over Maria. Welcome back, KP.
Michael, it's a pleasure to be back. Thank you for having me. How are you?
I'm great. Kenny, we got great feedback this week. I was told that you and I are very funny and they still learn something. We don't try to be funny, folks. We really don't. Oh, and we don't. And I also got word that last week we sort of changed the way people were thinking about the world and helped them put it in perspective, particularly in segment 1 in the FarrCast. I thought that was great. And then this guy said, and I was also happy to tell you, Mr. Farr, sir, that I am 3 months younger than you are, and that makes me 4 months younger than Polcari. So I feel like a kid when I listen to your show. I like that too. Kenny, what are you thinking about these markets that are making new highs? Do you have a fear of missing out?
No, I don't fear missing out because I'm not out, right? I'm not out. It's not like I sell everything. I'm in. I'm in like you. You're in for the long term. You ride the cycles. You kind of, you know where you want to be. You understand what the risk is. But look, we made a new high. Then we had that China headline, created all this anxiety. We came right down and tested trend line support at 65.50. We're trying to bounce again. We're trying to recover the losses. But I think all it told me was just how anxious investors can be on a trade headline. Look, we're not getting any economic data because the government shut down. So there's nothing driving the market in terms of economics. There can be speculation about it, but we're not getting any hard data. So the China headlines are the ones that are creating all the noise. Not even the government shutdown is creating that much noise anymore. It's all about this China headline and kind of the perceived trade war we're going to have. So, contrary to you, I actually think the path of least resistance is lower, because I think we get another negative headline and you're going to get the market's going to go into free fall again, mostly because the algos respond, right? The algos are not like you and me. They don't sit there.
Free fall. Wait a minute. Free fall. When have we seen free fall? When do you get free fall?
Okay, free fall. Maybe free fall was a bit dramatic, but we could see that the market. We could see the market once again on Friday when I wasn't here because I was celebrating my anniversary. But we had that
happy anniversary, KP.
Thank you. 40 years I'm married. 40 years, Michael.
Years. The woman is a saint.
Yes.
Saint.
If you ask her, she'll tell you they've been 40 long years. That's what they'll tell you.
But she told me they've been 16 of the happiest years of her life.
But anyway, I think that the market is just sensitive, and I think people need to just understand that. Doesn't mean you got to get out. Doesn't mean.
Let's go back to Friday. Go back to Friday because it came right down to the trend line. It came right down to the 200-day moving average. Correct?
No, it came down to the 50-day moving average.
50-day moving average. And it came right on it, and it was just a boom, technical standard, not a big emotional, but just boom, technical, and it held up. Santoli says that's important. I read his piece yesterday. Yes. What do you think?
Well, I think that is important, right? At least that it held. But I think we've tested it now once. Typically, the market will test it 3 times, and then you'll really find out by the 3rd time whether or not it's going to hold or it isn't. So that's why I'm kind of a little bit cautious on where the next move is. Look, we're long, we're invested. I'm long, I'm invested. I'm not running away. So if we go higher, great. If we go lower, then I'm going to take advantage of that and take money that I got on the side waiting to go to work and put it to work, very much like you and so many other asset managers that have been in this business for a long time and that understand they have to be patient and wait for the cycle. But look, I'm invested, so there's no fear of missing out for me or my clients. And I would say probably you'd say the same thing.
Well, yeah. I mean, my clients are in, and we're still within these bands. From Jay Powell, okay, and his comments yesterday. I think what we heard was what I heard was it looks like we'll probably have another cut, even though I really don't have the evidence to support it. But the risk in not doing it strikes me as one I don't want to take. I think that's what I heard. What did you hear?
Yeah, no, I think that's exactly right. I kind of heard the same thing. It's going to be interesting. Look, the market continues to price it at 25 basis point cut. Stevie Mirren comes out again. He's pushing for a 50 basis point cut. And he's saying the fact now that there's no economic data and we got these Chinese headlines is going to cause more angst in the market, that all the more reason the Fed should be more aggressive. And here's what I'm kind of scratching my head a little bit.
Everybody writes him off as a toady anyway.
But if the China headlines are about a trade war and rare earths and all that stuff, and they're going to disrupt the global supply chain again, cutting rates by 25 or 50 basis point is not going to fix the rare earth problem, right? The problem is still going to be there. So his argument about, we have to cut them quicker, we have to cut them sooner, I think he's wrong. I think 25 is more than enough, and then I think they actually have to stop. He came out this morning, he's on with Maria, and he's calling for 3 more rate cuts, bing, 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 at the next 3 meetings. So by the end of January, we'll be down another 75 basis points.
No. That's you can't do that. Look, they've got to still have more data. They've got to have more data before they make that decision.
I agree with you.
Right. And it's not going to solve rare earths. It's not going to solve an employment problem. I mean, when you are having a really strict immigration issue and you're shrinking your workforce, immigration policy is shrinking the workforce. Sorry, economic fact, folks. That's an economic fact. Right. The workforce is having pressure. So if you don't have an expanding workforce, the only way you get GDP growth is an expansion in productivity, which AI is providing, but cheaper rates aren't going to do jack about that. So what do you do? you got to make sure that the tariffs, which are new and have been in place and are going up and down and bouncing, we got the whole yo-yo follow the bouncing ball thing going on here. But it's not, they're not really going lower. There's some ratcheting higher. Does that appear? Do those higher prices start to seep into the market? And if prices start to go up, that's a sign of inflation. The Fed can't cut into an inflationary environment. That's suicidal.
100%. And look, but we're already listen, if you look at the last, 3 or 4 months of CPI and PPI, the numbers are churning ever slightly higher. They're not going down, they're going up by 1/10%, 1/10%. And so what I'm saying to you, and I agree with you, the economy is not falling out of bed. Unemployment is at historically low rates at 4.3%. Inflation is it's not getting out of control, but prices are not going down. And so the Fed's trying to cut into that environment. I don't think they need to be very aggressive at all. And I'd be very, very cautious.
So we can't politicize the Fed. We're watching the numbers. I don't hear you saying I don't hear you telling me the path of least resistance isn't higher. I hear you telling me that you've got 3 more technical blips historically down to test the 50-day moving average. Are those buying opportunities, Kenny, or do you really going to look for that third one to break and crack?
So here's what you got to do. You got to wait for the third one to happen, because the third one's either going to hold, and if it holds, that to me would be a much stronger signal that that we're good. If we test it again and we crack, then it's going to set off a whole bunch of algorithms, because we broke this technical level that's going to cause the market to just take a dip lower. I think that's honestly what I'm waiting for, and I think that's going to come, because I think we're going to get more, I think it's going to be the negative headlines, either that or it's going to be when the government comes back up and they start reporting this data. If the data isn't what the market thinks it is, and it's worse, or it's not what they expected.
Yeah. Oh, that's a good point. That's a really good point.
That's right.
That's a good point.
Thank you.
Because we're guessing in the dark, aren't we? Huh?
We're getting flying blind. That's what we're doing. They're flying blind at the moment. And for a Fed that says they're data dependent, it's difficult to be data dependent when you don't have the data.
Yep, completely. So we're sitting here walking through a dark room with some vague idea or hope that we know where the damn door is. And at some point, they're going to turn on the lights, and we're either wrong, right, about our policy. Kenny Polcari is the Chief Market Strategist for Slate Stone Wealth, and my great friend. KP, thanks.
Thank you, sir. It's always a pleasure. See you next time.
We'll be right back. Please stay with us.
Michael Farr and the FarrCast are proud to support Heroes, Inc. Heroes supports the spouses and children of law enforcement officers and firefighters who gave their lives in the line of duty to the greater Washington, D.C. community. Their singular goal is to honor the supreme sacrifice made by these individuals by caring for their families. Heroes' work begins within 24 hours of the tragic loss and continues indefinitely. We invite you to learn more about Heroes' mission at heroes.org. We hope that you will consider supporting Heroes as they endeavor to honor those who protect us. That's heroes.org. Heroes, here for you, here for good. And now, back to the FarrCast and your host, Michael Farr. Thank you for joining us on the FarrCast. And now, back to your host, Michael Farr.
Welcome back to the FarrCast. Thanks so much for being with us again this week, the 16th day of October. Mahaffey is in Japan as the government continues to shut down. We have reached out to Matt Leffingwell and others, and we've been arranging some other FarrCast guests coming up. We've got an admiral coming up, and we've got a real estate expert coming on to explain the building difficulties commercially in Washington, D.C. There was a project that was getting a new roof, and ICE showed up and arrested all of the roofers, many of whom were legal, but everybody gets arrested until they're cleared. And people now don't want to come in to the district or any of these nearby Washington building projects. So we want to find out if this is more than just episodic. We want to find out how certainly anecdotal, but we want to find out how widespread this might be. So we're going to try and bring you a new perspective here, but very interesting that workers don't want to come to work in dangerous areas. And by dangerous, it's not criminally dangerous. It's the danger of ICE enforcement, and even those who are legal, who would attract ICE's suspicion, don't want to deal with it. They'll go to work somewhere else. I guess that seems understandable. Okay. When we talk to Matt Leffingwell, he has suggested that he can come on next week or the week after to talk about the shutdown, because it's still going to be going on. He pointed out two things. One, that there's plenty of access on Capitol Hill right now. That means that senators and congressmen are basically there. There's nothing going on. Nobody's talking about anything. So there's really no real work getting done. And he can get constituents and his customers in to see them now. He's got more access than he's had in a long time. So if you're a lobbyist, ladies and gentlemen, and you're representing some corporation who's trying to import more chips or build chips in the US, or needs to fight about a certain area of tariff for a certain area of oil production or gas production, as we've discussed with Daryl Owen in the past on the FarrCast, when one certain area of tariffs affects a very obscure kind of a product, and it just gets caught in the government net of, oh yeah, well, we didn't mean to do that, but we really don't have time to go change it, and a whole industry suffers. That's when you hire the lobbyist. The lobbyist gets you into your senator's office and maybe several senators' offices, and they go back and get it done. You'll spend a lot of money, but you can also be swept under the rug of, we don't have time, and you're kind of irrelevant as far as we're concerned. Everybody who's been to the DMV understands what that experience feels like. It's not good. You shouldn't have to pay for the access, but in fact, there's a huge industry right there with the world's oldest industry, and not very different, by the way, the world of lobbyists and what they get paid to do. Okay, so this shutdown, as the FarrCast suggested when it first started, would last at least a month. At least a month. Coming from our friend Greg Valliere, it made sense to us, and we're seeing no progress on that. And we think that Greg Valliere may be an optimist with his 1 month. So this is the least dramatic shutdown Leffingwell has ever seen in his career. Nothing going on Capitol Hill. Nobody's too upset about this shutdown on Capitol Hill. We'll see when people start, when they stop getting their checks. Jay Powell, in his speech yesterday, said this: our long-stated plan is to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. Are there ample reserve conditions? Powell says yes. We may approach that point in coming months, and we are closely monitoring a wide range of indicators to inform this decision. Well, if they can get the indicators from other areas of government, given the shutdown, they will inform that decision. And as he went on to say later, they're going to end up guessing. Powell again: if we move too quickly, then we may leave the inflation job unfinished and have to come back later and finish it. If we move too slowly, there may be unnecessary losses, painful losses in the employment market. So we're in a difficult situation of balancing those two things, and we're back to Harry Truman's one-armed economist who's never existed, on the one hand and then on the other. So there we go. That's what they are doing on Capitol Hill. The fight continues. Finally, you're seeing Stephen Moran, the new Fed governor. You're hearing from him suggest that we need bigger cuts and more cuts and bigger cuts and more cuts. This is Trump's new appointee. He's the only one who voted for a half a point cut at the last meeting. I'm sure he'll do it again at the next meeting, and I would reckon he'd be the only one, unless he is joined by Governor Chris Waller. Now, Chris Waller has been a pretty sound guy over the years and gotten progressively more dovish, and this is my criticism, folks, personally my criticism, but he has gotten more dovish, more accommodating as it has suited his political future. Got it? He wants Jay Powell's job. He wants to be Fed chairman. So he's saying things that he knows are going to make Trump happy. Oh, Farr, you're such a cynic. Maybe. I was born in Washington, D.C. 64 years ago. Okay. I went to high school on Capitol Hill. I know a lot of these senators and Congress people and other appointees and secretaries of this and that. I know them. I know Jay Powell. All right. Just telling you, this is looking like the politicization of the Fed. We've already got government owning different stocks. The government now owns positions in two lithium producers in the U.S., along with Intel. I expect that will expand under the Trump administration. And I'm thinking we ought to take a hard look at owning whatever it is the government decides it wants to own. Awful hard to have big problems when the government's your partner. You don't go out of business. Ask any of the banks throughout Europe. There are deep sovereign connections, and balance sheets don't matter after a while. That's not cynical. That's a fact, folks. That's a fact. So we're watching all of it. Markets making new highs. The Fed has to stay independent. They're operating in a very dark room and searching for the light switch. Good luck. The government's controlling the light switch, and they need data. They have to see it. They're not getting it clearly. We will watch this earnings season, and what the banks say is important, and what they're really looking for, and the Fed is watching this earnings season as close as they've ever watched any earnings season. They are looking for lower margins and comments on lower margins due to tariffs. Increasing tariffs hits somebody's balance sheet. Somebody pays for it. Who pays for it? The importers. When they bring that stuff in this country, they're paying higher prices. That has an impact. Remember, we told you they pulled forward huge amounts of purchasing in the first quarter of 2025. There was a huge lack or deficit in the second quarter. The third quarter should start to tell the tale, and the fourth quarter will be very clear. No way around clarity in the fourth quarter. Third quarter, we're hearing about it now. Watch those numbers. I promise you, the Fed is, and we are. 10-year Treasury at a 401 does not suggest that this market has a risk-on trade. It means that a lot of people are buying those treasuries and keeping those yields low. Good news is cost of money's low. Fed is on the side of lowering. That's all good for current share prices, even though it might not be good longer term for the economy. It's a difficult balancing act for both the Fed and for investors to say, how long do I stay at this bar where the music's loud and the dancing's wild? Drinks are still flowing freely. Do I stay hang out and party, or do I get out quickly because I know the cops are going to show up sooner or later? That's it, folks. Everything you need to know about the economy and markets today, you learned in college. Perfect. And you didn't learn it in class. You learned it around 1 a.m. 1 a.m. I learned a lot at 1 a.m. in college. Harry, shut up. Don't you say a word. For my producer, Harry Jennings, everybody at Hightower and Farr Miller in Washington, thanks so much for listening as we cover Wall Street, Washington, and the world, bringing you experts and insiders from around the world, everywhere we can, to help inform, improve, and help you think better and more critically about what's going on and how we deal with it with our investments. From Naples, Florida today, I'm Michael Farr. Thanks so much. We'll be back again next week in Washington. See you next week.
And that's a wrap for this week's abbreviated episode of the FarrCast. Thanks for being with us, and thanks to Kenny Polcari for joining us. The FarrCast is produced by Michael Farr and Harry Jennings and comes to you weekly for free on all major podcast platforms, including Apple Podcasts, Spotify, and TuneIn. Please be aware that anytime we or any of our guests mention a specific company, sector, or refer to performance in relation to an earnings report, news headline, or economic trend, it is not a recommendation to buy or sell. Review the risks and rewards of any investment with your financial advisor for what specific investment and general strategy is appropriate for you before you make any investment decision. And if we can be of assistance here at Farr Miller in Washington, please reach out to me at hjennings@farrmiller.com. We are here to help, and I'll be happy to put you in touch with one of our investment professionals to help you navigate your financial course across the changing investing landscape. We are grateful for all of your notes and comments, and we try to respond to as many as we can. Please keep those emails and messages coming. We'll be back with you next week, and in coming weeks we have a slate of guests from across Wall Street, Washington, and the world, including Admiral Terry McKnight, Dr. Jeffrey Lacker, former president of the Richmond Fed, as well as more from FarrCast fan favorites like Jim Urio and Jim Lebenthal. Until next time, take care, stay safe, and stay healthy. Thank you for listening to the FarrCast, Wall Street, Washington, and the world. Farr Miller & Washington is a group comprised of investment professionals registered with Hightower Advisors, LLC, and a SEC-registered investment advisor. Some investment professionals may also be registered with Hightower Securities, LLC, member FINRA and SIPC. Advisory services are offered through Hightower Advisors, LLC. Securities are offered through Hightower Securities, LLC. All information referenced herein is from sources believed to be reliable. Farr Miller & Washington and Hightower Advisors, LLC have not independently verified the accuracy or completeness of the information contained in this podcast. Farr Miller & Washington and Hightower Advisors, LLC and any of its affiliates make no representations or warranties, expressed or implied, as to the accuracy or completeness of the information or for statements or errors or omissions or results obtained from the use of this information. Farr Miller & Washington and Hightower Advisors, LLC and any of its affiliates assume no liability for any action made or taken in reliance on or relating in any way to the information. This podcast and the materials contained herein were created for informational purposes only. The opinions expressed are solely those of the authors and do not represent those of Hightower Advisors, LLC or any of its affiliates. Farr Miller & Washington and Hightower Advisors, LLC or any of its affiliates do not provide tax or legal advice. This material was not intended or written to be used or presented in any way to any entity as tax or legal advice. Clients are urged to consult their tax and or legal advisors for related questions.